All right, everybody, we are back with another one of our GOAT speakers. Jim, I'm so grateful for you to be here, man. Thanks for coming on.
Thanks for having me. It's always good to hang with you.
Yeah, this is amazing. Before we get into it, it's great to see you again, but I know that there's folks that are tuning in. This might be their first time. So as we get into it, can you tell us a little bit about who you are and what you're working on with LeFi?
Yeah, sure. I'm Jim. I lead technical sales and solutions engineering at LeFi. Come by the way of acquisition. So I've been at LeFi for past like year and a half. Before then, I was a founder of a cross-chain bridge called Catalyst that LeFi acquired about a year and a half ago. And so been in kind of like a product leadership role for the past year or so at LeFi. And most recently, I actually switched to being more of like an enterprise sales, technical sales role. And that's because my main priority now at LeFi is institutions. And so I meet with financial institutions. I meet with leading financial and fintech enterprises to actually integrate our brand new stack with them, right? And so we integrate into RWAs, on-chain stocks, stablecoins, other asset issuance. So excited to talk about what I do, what I see every day working with these financial institutions. So happy to be here.
Yeah, so are we. And thank you, man. I really appreciate that. And, it's a great segue because we've seen, as people come more and more on chain, as markets come more on chain, we're now seeing things like tokenized stocks being traded, perps futures, and individual equities, early tokenized IPOs. All this is happening all at once. And this is kind of what we meant when we were calling this topic the 24/7 Wall Street. What does that look like today? And how far does it go? Like, in your opinion, where does this take us?
Yeah, I mean, honestly, I think it's early days, right? It's like, I think the vision everyone agrees on, like 24/7 accessibility into brand new asset classes that, traditional on-chain users wouldn't be able to get access into, right? To get access into, US stocks or Western stocks, has historically been kind of gated towards, maybe mainly like US residents or other kind of jurisdiction requirements. But they are, I would say, as an American, the primary way of value and wealth accrual within the United States, right? Like we're taught from young to like buy into different ETFs, buy into different funds, buy S&P 500. And that has paid off really, really handsomely for, the generations before us, but even like our generation, right? And so to not have that access for like people who live in other jurisdictions, like in the global South, for example, I think is like kind of a disservice. And so that vision is like very much what gets me super excited. I think looking at what I do day to day and looking at the current state now, we're not quite there yet, right? I think we're very much at kind of the precipice of a really big societal shift of like embracing those things. But the net of it is like, it's coming on. Liquidity is decent, right? It's certainly a fraction of what it could be, but it's decent. People get access, which is really great. People are buying and holding. These assets are holding pegged, right? And so I think we're at early innings, but I like what I see, and I think we have a lot more to go.
Yeah, I completely agree, man. And I love the point that you made about accessibility as well, because that's always been one of the things that gets me the most excited about this industry is just the way that we can democratize all these things that, if you're in a country like ours, they seem kind of just like a normal part of life. But if you're in a different part of the world, like this is all very novel and new, and it affords the same luxuries that our country gets. So I love it, man. That was couldn't have said it better. Really appreciate that. And we've been talking about this, Mark and I, off camera about things, for example, like NASDAQ getting approval to extend trading hours. There's being real progress made in the TradFi systems to kind of adapt now that these on-chain markets are just, changing the game across the world. It's not always the case, right? So what do you think TradFi is doing, like in these conversations that you're having that you really are excited about to close that gap and make it more democratized, more decentralized, more in the Web3 ethos? Or is this just an edge that we're always going to have on traditional markets?
Yeah, that's a really good question. I don't really have a definitive answer for you. I always think that there's going to be an edge of building in like open permissionless systems that just have like way less overhead than legacy systems, right? It's like when you think about the concept of market hours, it's not like someone all of a sudden decided that or from the inception decided that these should be the market hours. It should be traded within these specific days. There was kind of like a trade-off between what is the operational overhead of like having markets open versus not, right? And that was kind of where the natural market kind of landed over the past, at this point, even like 100 years. And so it's just an assumption that hasn't really been revisited, but was very much decided based on like trade-offs of like benefit versus, maintenance and costs and other overhead, right? And so we have like in crypto have the ability to like rethink it from first principles and like offer 24/7. I do like the idea that legacy systems are trying to, make it more accessible, right? And I think like the reason why I personally feel strongly about making it more accessible is not only kind of what we talked about in terms of different users getting access to this, but even like as someone who has access to these traditional systems, you are kind of, there's always really rapid price movements when you look at like before hours, when you look at after hours, right, of certain markets. And that movement is actually really dangerous because, you can fill orders within those hours. And because the price movements are so drastic or even drastic as on the opening bell, that is like dangerous for people, right? Especially if they're on leverage, especially if they're on, like levered ETFs, especially if they're trading options, derivatives, right? And so that is really, really tough. And I think you actually kind of smooth that out when you provide more 24/7 access. And sure, there's the trade-off of like, now you're always on and, you're never really stopping. But we've actually observed that within crypto markets for like the past like decade plus. Well, honestly, like 2 decades at this point, nearly. And honestly, like it hasn't really been super bad. If anything, it makes it a more global market, right? Because you have movements of US hours, you have movements of European hours, Asian hours. It is definitely, I think, like very much solidified into its own heartbeat, basically. And there hasn't really been a big detriment. So I feel like people who throw that argument of like, always being on and everything being a detriment is not necessarily proven to be the case.
I love that. Man, how do you know all this? Like, if someone's watching this, they're like, "Wow, Jim is like the most informed person I've ever heard." Like, what are some of the resources that you'd point people to like get educated to how these things work and how these markets move?
It's hard to say. Like, obviously, I'm sure there's online resources, right? I'm sure there's like really good YouTubers and really good just like resources. I think asking Claude, honestly, is a pretty good start in this day and age. I mean, for me, it was just like an accumulation of a ton of interest, right? It's like being taught, I guess, from an early age to be financially responsible, right? Like max out your 401k and like then you have to like select what your 401k is allocated towards, and you learn about the S&P 500, you learn about the NASDAQ, you learn about tech stocks, stuff like that. And so like gradually you kind of get deeper into it. And obviously like 2020 with like meme stocks and Robinhood was a really big kind of eye-opening moment for myself and my peers about like how to really interact with all these financial instruments. And so over time, like I kind of just accumulated knowledge. I don't really know how to like advise someone who's starting from scratch outside of just like asking Claude, also just like rolling up your sleeve, like trying out this stuff, right? Having an interest, especially around like AI stocks and all these like upcoming IPOs or new IPOs, like SK Hynix and stuff like that. Yeah, that's broadly what I advise people. Just like chase your interest necessarily and just go down the rabbit hole organically as possible.
Yeah, 100%. No, that's really wonderful direction for anybody who's listening. And I couldn't yeah, that's on this note, and you gave me such a good transition, I tripped over my words. You'd mentioned things like Robinhood, and my next question was gonna be, like, on this aspect of tokenized stocks, the emergence of them over this past year, Robinhood Chain has been driving a lot of this and has added hundreds of thousands of holders in a month alone. Institutions are now becoming direct partners and issuers. And so this is not like a passive engagement. This is like very active participation. What do you think convinced these institutions and these players in more TradFi scenarios like Robinhood? I know they skew somewhere in between, but what do you think has convinced them so much to build towards this infrastructure and own this on their own instead?
I can only speculate, right? I'm not sitting in those meeting rooms, unfortunately. I would say the opportunity is just so big, right? Like when you look at the margins of like being a traditional brokerage or broker dealer like what Robinhood is providing, there's a good amount of margin to be made. But if you look at something like, the New York Stock Exchange, for example, or like NASDAQ, there's just more opportunity to be made, right? And so I think it kind of makes sense where if you wanted to build it from scratch, you're going to use next generation technology. You can use, on-chain stocks. They did the exercise in deciding if it was better to do their own chain or if it was better to use an existing chain. They went with their own chain, which I think is totally fair, given their scale and kind of the plans that they have in the future for how much scale they want to bring on chain. And then you can capture a lot of that all the way down, right? You capture the market dynamics of like being your own matching venue, basically. You capture the sequencing fees or block space fees that you have from being your own chain. And so it was worth the trade off for them in terms of building a lot of those stuff from scratch, basically. That's at least how I would have handled it if I were in those rooms.
Yeah, no question. And it was a great answer. Um, the same thing is happening, as stocks are getting tokenized, assets are getting tokenized, and they can also live on multiple chains at once. I'm curious, what actually has to happen behind the scenes to move value or execute a trade across those chains in real time without the user ever noticing complexity or without any like insane volatility across chains.
I think we're still trying to figure that out, honestly. Like I said, it's still early innings for this asset class on chain. I will say that broadly, the most important piece is honestly the infrastructure that we've built as a crypto ecosystem for the past like 3+ years, which is just like interoperability tooling, interoperability infrastructure. So at DeFi, like our bread and butter has always been what we call like routing or orchestration. And basically, what that means is with more fragmentation, as you see with chains and asset types of those chains, right? Like different denominations of USDC and now like other denominations of USD stablecoin. And now with like on chain stocks and other forms of RWAs, there is just like a proliferation of just, assets and venues that people can get access to. And for us, like we've built a way to basically abstract all that, right? We have a orchestration engine that basically does the routing such that if you have one token on one chain and you want to get, Ondo SPY on Binance Smart Chain, you know exactly, what are the steps to take in order to do so, right? Where are you swapping? Where are you bridging? You also know what is the cheapest, right? What has like the deepest liquidity based on that routing. And so that has been like really, really helpful in terms of ensuring that the user experience is as good as possible. And then when you go to the point of like, having SPY being issued within a ton of different RWA providers, like I said, I think we're still early innings of like ensuring that they are as close as possible, right? It ultimately becomes like a liquidity issue, but it's pretty good given the infrastructure that we've built, right? With this routing. And on top of it, not to go into like a big interoperability rabbit hole, but where there's also solvers that are also facilitating that as well, right? So basically these third parties, many times licensed market makers, who are actually able to facilitate the swaps in and out of certain assets. And many times they can even do it for, these various RWA providers. So you can swap from X stocks to Ondo to Robinhood, relatively easily, given the infrastructure that we built from, the interoperability perspective.
Man, you gave me such an easy transition with that and also a phenomenal answer. A lot of the biggest trading and fintech apps are starting to route through your infra. The users that are using these different applications or working through these different firms, they don't ever see you all's name. I'm curious why this has been such, like, just working through it. Like, this is a winning model, obviously. You guys are doing phenomenally well. Was it a conscious decision to have this be somewhat of an invisible infra, or was it like a conscious choice? And is this something that you think more folks should be doing, is building invisible rails and not focusing so much on consumer facing brands?
Where do I start? I think I'll start in a weird sidetrack slash segue it into an actual accurate answer for you. So when I was a founder at Catalyst, I believe very strongly in strong brand marketing, which is, where you and I met and you gave me a ton of really good advice on how to navigate socials and brand and product marketing and all that good stuff. I would say I still value that a lot, but I think LeFi has a bit of a different perspective, honestly. And our perspective is to be quiet and to really just execute. And, I think our sales team, our commercials team is some of the best in the entire space. Right. And so the more I think public you are, the more firepower I think you give your competitors for very little gain. Right. You can argue maybe word of mouth and eyeball distribution is helpful from a marketing perspective. I think our sales engine, our commercial engine is so good that we don't really necessarily need to talk about it too often because it's just that good, right? And we already get inbound because of the scale that we reach. And so we're very much of the camp of like, hey, we're not going to really publicize too much of what we do because we're in the business of winning, honestly. So I don't know if I'm allowed to say that, but it is what it is. They put me on here. So that's kind of like the mentality that we have. And in terms of being more of a headless or white label solution. I mean, ultimately, we're trying to help our integrators. We are in every major wallet at this point, every major front end in crypto. And we're obviously expanding way beyond that into fintechs and traditional finance. We want them to be successful. We want them to own their customer relationships. They are the ones bringing their own customer base. They're the ones bringing their own brand to it. And we just want to be able to offer an experience that is up to bar of what they want to provide for their users, right? And so we're not really trying to steal their limelight because we greatly benefit from them doing well, basically.
Man, I can't wait to clip that. We're in the business of winning. That is one of the best lines we've heard in the entire Blockhouse inaugural event. And I completely agree with it, And it depends on the person. Like some folks, it might move things forward to be more consumer focused. Some folks, it might. I completely agree with everything you said, though. And I think folks that listen to this should really take notes. You know, focus on what's driving your ROI and your KPIs and focus on that, and everything else is noise. Focus on the signal. You're in the business of winning. So if most users have never seen you all directly, how do the institutions and the apps route through you all knowing that you're the best? How do they get to the point? Is it just through these sales pipelines, or how are they hearing about LeFi?
So I want to preface that I think every company is different, right? I in no way think that, doing brand, if you're Phantom, for example, you should be doing brand marketing. You are a B2C product, right? And in many ways, even if you're an ecosystem, like Hyperliquid, for example, marketing is totally warranted. I think when you're a B2B product, it's kind of a toss up, right? But for us, what we've chosen, this is the DNA of Philip and our founding team and everyone that he's kind of hired under him. We're very much really, really proud of the sales and commercials pipeline and process that we've built. And so, how do institutions, how do enterprises hear about us is through that, right? It's very much through outbound. It's through word of mouth of our existing clients, referrals of our existing clients. We have a very, very rich pipeline from that alone, right? And honestly, as a former founder, I've learned a lot from this type of environment, which was very different than kind of how I operated Catalyst.
I'm learning a lot listening to you right now. I appreciate you guys and the team, and I think it's an incredible ethos. And it's clearly working. So it's awesome. We've heard this has been a really great talk, Jim. I really appreciate it. I got a couple more questions for you. I know you're a busy man, but I have to ask a couple more. We've heard about some tokenized stocks that are, whether it be, there's a myriad of different tokenized stocks, right? You have ones that are actually debt securities trading a stock price. They're not real equity. You have ones that are no voting rights. They're just exposure. And so that we've started to see as institutions come on board, as these financial applications come on board, we've also seen regulators start to pay closer and closer attention, both in the positive sense of rolling things out like Genius Act and, trying to get Clarity Act passed. But we've also seen the SEC start to draw a line between issuer-backed tokens and these more synthetic ones. does that distinction matter to buyers? And is this industry moving towards one of predominantly real ownership in this regard, or is it still, you know, putting people in a place of like exposure and risk? Like, what are your thoughts on that?
I would say that there's a world for both. Yeah, I'm going to be as diplomatic as possible. I think there's a world for both because ultimately it's about trade offs, right? About, I guess, user like knowledge or education, rather, user education. And I think there are benefits to synthetics that are are worth having in the marketplace. And I think there are benefits to more of a direct kind of transfer agent type relationship of a direct equity that should be had. And so our POV as LeFi is that we are in the business of helping our clients and getting, as much liquidity, as much distribution, as much exposure to these asset classes, to the users, to our enterprise clients, our B2B integrators, as much as possible, right? Now we draw a bar. Don't get me wrong. Like we draw a bar at, we're not going to be surfacing things that we don't feel comfortable personally. But I haven't personally, I don't think anyone on the team has seen that case yet. Like every team working in this space are very, very high quality teams. They're well funded, they're high ethics, they're incredibly smart. I've had a really big pleasure working with a lot of them. And yeah, I think they're just making a trade off in terms of what the mechanism is. But I think there's a place for both of them. And yeah, I think people should get exposure to whatever they feel comfortable.
Your answers have been phenomenal, dude. You would be a good politician. I'm not gonna lie. So I
I'm
have two
training, man.
final questions. I
Running for
got
New
two.
York mayor.
Oh yeah, man. Listen, I'd vote for him. Uh, okay, so I have two final questions for you, Jim, and thank you again for coming out, man. The first one is we were talking a little bit before the show started, and we were talking about naming this 24/7 Wall Street. You made a mention about how you're not necessarily sure about it being 24/7, and I just thought it was a really awesome opinion. Do you mind elaborating on that a bit?
I don't know if this is going to be a super hot take, but I'm also like a little autistic, so I never know like what I'm going to say is going to like really resonate with people or like piss people off. I think we're a bit away from 24/7 Wall Street. It's kind of what I alluded to originally, where I like the vision. I just think we have a long way to go, very much like early innings within this industry, right? And why do I say that? I say that because I do work with a lot of these issuers and issuing platforms like protocols. And I'm based in New York. I'm kind of in and out of these offices every day at this point. And I think there's still structural limitations to offering like 24/7 Wall Street, right? It's like, for example, if you have a, a direct relationship to a transfer agent, so your on-chain equity is very much backed by actual, certificates that is traded within any sort of exchange. That does not have 24/7 nature to it, right? Because if you wanted to request for the underlying, that is operating within market hours, right? And so that is kind of restriction. Now, if you look at synthetics, which have less of that kind of underlying backing, underlying restriction, you still kind of encounter different restrictions in the form of liquidity, right? And so, if you have a synthetic that is tied or bounded from a price movement to an underlying asset that's trying to track, well, if it's not tradable within certain hours, right? If it's not tradable in the weekend, if it's not tradable after hours, it may depeg, and then it may have to go back to whatever baseline is or whatever the opening bell price is, right? And so that is not 24/7 Wall Street because it's more like a tracking of a market hours Wall Street, basically. Now, there's nothing wrong with that. Like if you're a buyer and holder, like what I'm, a big advocate for accessibility from other users and other global users, that's perfectly fine because ultimately, it's going to track it directionally on both ends, and you're not trying to move in and out of it very quickly. But if you are, or if you have a derivative on top of it, then I think you're going to run into some issues. And then you also have the piece about like liquidity, right? It's like you're not going to have the same liquidity as what's traded on like the NASDAQ or New York Stock Exchange. So if you are buying or are trying to exit a big clip of like a specific asset, like SPY, for example, it's not going to have the same, the same ability to absorb that price impact as what you can do with a traditional venue. So I still think we're a really long way to go. I also think it's maybe like a definitional thing, right? It's like, what does 24/7 Wall Street mean? But for me, it's like 24/7 and then like the liquidity of like Wall Street. And I think we're pretty long ways to go for both those pieces.
Jim, you're the GOAT. I have so many more questions for you, man, but I appreciate your thoughtfulness, the way that you approach these questions and your answers. And yeah, we're kindred spirits, man. I really appreciate you. In the last minute that we have here, I'm really curious, like, what are you most excited about going into the second half of 2026, both for LeFi and just as a member of this broader Web3 decentralized community? Like, what are you excited about for the rest of the year?
I very much think, and I feel this like in my bones, that we are on a precipice of like an absolute RWA explosion, right? It's like I'm having conversations with names that, like I would not even have imagined would even consider crypto and blockchain and Web3 five, honestly, even like 3 years ago, right? And that is like really exciting. And they're incredibly well versed. They've hired a lot of crypto natives to like lead these conversations, lead these divisions. And so they are taking this very, very seriously, right? And so I'm having very in-depth conversations about what does it mean to do asset issuance? What does it mean to have mint and burn access? What does it mean to pick, a home chain versus having a multi-chain strategy? It's really in depth, right? And so I can only imagine that they're either curious or they're already bought in, and it's just a matter of time for literally like trillions of dollars to move on chain. So really, really exciting stuff. Like I said, this is early innings. I think we have a long way to go, but I think directionally we're trending in the right space. And yeah, I mean, it's only a matter of time before something good happens, I guess.
I completely agree, man. Now, and we've had a common theme on the Blockhouse inaugural event today. We've had, whether it be the RWA season themes that we heard from you and from DeFi Dave, from Cap, or it's this idea of like the agentic future that we've heard from folks like Coinbase and Realign Labs. So, I just love how I agree with you. We got greener pastures ahead, and we weather some pretty brutal storms as an industry and as a community. So it's up only from this perspective. But as always, y'all, it's NFA, NFA, NFA. And Jim, I'm so grateful for you, man. This was a wonderful. You got to do more of these, man. We got to have you back. Thank you so much.
Happy to. Yeah, man. Thanks for having me. Always a pleasure.